Welcome back to the channel. Today was CPI day. We heard from Fed officials, from Trump, from the crypto czar. We had news last night that H200 Nvidia GPUs will be sold in China, and that is causing very much a risk-on move in a lot of these semiconductor names today, but a bit of a drag on the rest of the markets. The Russell, the Dow, even the S&P in the red today, whereas the NASDAQ is moving higher. Now, what's interesting about this is CPI today actually came in better than expected for the most part. And even though you're getting the sell-off, it's not CPI related from that perspective. Bond yields are moving higher, but the VIX, the fear gauge that tells you if Wall Street is fearful, is actually down today. So I have a very interesting perspective on this market, and I think you need to hear it. First things first, hit that like button and subscribe to the channel. Let's get started. Check out that link down below in the description of this video if you guys want to come join the most unique and special trading community in the world, because what we are doing over there is finding hidden opportunities within smaller companies in some of the core themes of the next 10 years. AI, energy, the grid's going to have to double in the next 10, 15 years just to account for AI. These are central themes. There's opportunities in biopharmas as well as robotics. We are capturing all of those as well. If you guys want to see the trades that I am making in these small cap areas, striving for those, 10, 20, 30, 40, 50x opportunities, check that link out down below in the description of this video. The philosophy of that is a lot of small caps are terrible companies. If you buy the index, you're buying the good ones and the bad ones. What I'm doing is finding the good ones, investing in those. So for an example, if you buy, 10, 15 small cap companies that are quality, you should do much better, much better than any other index, because you're buying the quality names within that index and not buying the bad ones that will drag down that index. So we're looking for opportunities that could go up multiples or magnitudes from where they are today, while also not going all in on just one stock, because obviously there's a lot of risk in that. So investing in a couple of these names should lower the risk profile while amplifying the total return. That's the idea. We are looking to grow the portfolio from about $75,000 to $1 million in the next 2 years with this strategy. Portfolio is already up over 65% year to date, and I do believe it's going to be up a lot more by the end of this year. If you guys also want to see my position in Tesla and some of the other stocks that I invest in, check it out, link down below in the description of this video. But back to the episode. And one of the big stories today is the CPI report. Now, core inflation month over month came in at 0.2%. The expectation or the consensus here, you can see, was 0.3%. So you came in lower than consensus, but in line with the forecast number here of 0.2%. So it was kind of in line with estimates. I would say slightly on the low side, but generally not a huge standard deviation move compared to expectations. Okay, we didn't get a really low number. We didn't get a really high number. Okay, so kind of in line. And I think it's more of, again, that wait and see approach with inflation from Fed officials. 0.2% is a run rate of 2.4% on a 12-month basis. That's kind of where we're running at right now on paper. So nothing really changed today. Everyone wants to see, okay, what's the July CPI numbers going to look like? Now, core year over year, and I will say this does not derail this market by any means. I know you're seeing some areas coming under pressure today, but it does by no means derail this market. Hopefully that makes some sense. You can see today the Russell is down 0.95%. The NASDAQ is up 0.64%. I think there's a lot of money funneling happening today as well. The news came out last night that China will start being able to receive H200 Nvidia GPUs. The reason for this is because Huawei is creating products to compete with Nvidia. So the logic is from, US government officials. If you don't let Nvidia compete in China, then you're just giving the market to Huawei. And that's, not great for US interest either. Okay. Now, I do see this as a positive development for US-China relations. And that's really what I'm getting out of this. Now that the US government is allowing these chips to be sold in China, that's very positive. That's almost like you and your buddy or your friend get into a serious disagreement and you apologize first. You're going to help the relationship, right? Just be the bigger person, apologize, and get on business as usual. So you're obviously seeing a lot of semiconductor related stocks today that are doing very well. And it's kind of a money pull on different areas like the Dow, like small caps. Now, what I will point out today, the VIX was up 4% yesterday. It's down 1% today. So I always like to not just look at one thing and abstractly say, is that bullish or bearish for markets? Yes, you have to do that to a certain extent. But with something like the CPI report, when it's kind of in line with estimates, you got to look a little bit deeper. The VIX tells you how much fear there is out there in the markets of a potential decline over the next 30 days. So if the VIX was skyrocketing today, I would say crap. Wall Street is viewing developments today as negative for the market. The VIX is down 1% today. So that means people are not as fearful today as they were yesterday. Even though your indexes are declining besides the NASDAQ, people are not fearful. That's why I said just a couple of moments ago, this CPI report does not derail this market. You're not seeing the VIX showing really any degree of fear at all today. So that's great. Now, what is also helping to kind of push down the Russell, along with the capital flow or suction from small caps and the Dow from into semiconductors, is the 10-year Treasury yields. 10-year Treasury yields are up 5 basis points today, mostly driven from algorithms. I would say, again, the CPI report was not bad by any means, but you are getting those 10-year Treasury yields that are up to 4.479%, and 30-year Treasury yields did top 5% at moments today, and that's seen as kind of like a not breaking point, but it starts to put more pressure on this market as 30-year Treasury yields get above 5%. Now, the pressure point for 10-year Treasury yields is closer to 4.5%, and you're on the doorstep of that right now. But I expect that this is probably an overreaction to CPI today, and it wouldn't surprise me if tomorrow yields fall and stocks are back moving in the upwards direction. Now, again, core CPI year over year came in at 2.9%. The consensus was 3%. Last month was 2.8%. So it's up a little bit, but you beat consensus. That's great. That's good news. Headline inflation month over month, this is including food and energy, was up 0.3%. Last month was at 0.1%. So when you get a sharp rise like that from the previous month, Wall Street's going to, bid up treasuries, right? They're going to sell off treasuries, bonds, and the yields are going to go up, right? But the forecast was 0.3%. So it was in line with estimates. Now, headline year over year came in at 2.7%. Again, last month was at 2.4%. So that is a sharp move higher from last month. But the forecast or consensus was 2.7%. So nowhere in this inflation report did you actually come in higher than consensus. Okay, it was all in line or slightly better, but it's a big move up again from last month, and that's where you're getting the reaction in bonds today. Now, New York Empire State Manufacturing Index was forecasted to come in at -9. Last month was -16. You came in at positive 5.5. So that actually came in much better than expected. Now, tomorrow we're going to get PPI. That is the Producer Price Index. CPI is Consumer Price Index. PPI, in theory, should go up before CPI. And we're not expecting a huge jump tomorrow. Last month was 0.1%. We're expecting that to rise to 0.2%. Core PPI month over month, same. Last month was 0.1%, expecting that to rise to 0.2%. But we'll talk about this a little bit more in the next video because we also get the Fed Beige Book as well that comes out tomorrow, which is, I think, even more important than PPI. But with that said, stocks in the beginning of the day today did hit a brand new all-time high on the SPY at $627.86. And if we take a look at what happened right as the CPI report actually came out today, well, stocks actually moved up initially on that CPI report. Like the CPI candle, although it wasn't huge, is when you hit a new all-time high on the market, right? Like that was the new all-time high. So just judging off the algo move from CPI, it came in, again, better than expected. Now, also in the headlines today, NATO Secretary General Rutte says secondary sanctions on Russia over Ukraine could hit countries like China, India, and Brazil very hard. U.S. Energy Secretary Wright says the U.S. is mulling creative deals to refill the oil reserve. U.S. Commerce Secretary Lutnick says the Indonesia deal is 0% on U.S. goods, but includes a tariff on their goods. Lutnick says we're not charging tariffs on raw steel, just the finished item. He says that South Korea, China, and Japan dump steel in the U.S. Lutnick says we need to get Chinese developers addicted to the U.S. stack, referring to Nvidia. And that's really the moat with Nvidia. People ask me all the time, like, is AMD going to compete with Nvidia? Like, the market cap differentials are huge. And in theory, you would say yes, right? But it's like Apple to Android. If you have an iPhone, you're not going to switch to Android. If you have an Android, you may switch to Apple, but you may not. Nvidia has a moat because of the stack, the software stack that really goes with Nvidia. Commerce Secretary Lutnick says we'll stay one step ahead of China, so they buy our chips. He also says we're selling China our fourth best chip. He also says that China chip sales were part of the magnets deal. Secretary Lutnick says AI is a competition between the US and Chinese standards. One reason why I'm ultra bullish on AI over the next really 5 to 10 years is because we are in an AI Cold War with China. That means you almost have forced innovation. Like, you can't not innovate. Right? It's like the Cold War with Russia, right? That brought a lot of new technologies, a lot of rapid innovation. As long as there's not a physical conflict somewhere, a Cold War is great for investing purposes. Trump's crypto czar, Sachs, says AI data centers in the US will need more access to power. Energy is a major area for investment to support AI. He says the US should do everything possible to boost US exports. He says that Huawei has advanced very rapidly in AI chips, but they are not comparable to Nvidia's products at this point. Trump says that digital assets are the future in a post on Truth Social. He wrote, "Happy Crypto Week. We'll work hard with Senate and House to get even more legislation passed." And the crypto czar says the Trump administration wants to prohibit CBDCs, that is central bank digital currencies, which is the whole point of having a crypto is for it not to be controlled by a central entity like the Federal Reserve, let's say. And the crypto czar says Nvidia chip sales to China are part of a larger talk. Citi's CEO says, I expect to see goods prices start ticking up over the summer as tariffs take effect. Again, even these bank executives don't understand what Main Street citizens are going through. Everyday individuals. There is no room to raise prices. People will buy less. People will not buy those products. I think a good chunk of Americans feel like they're in a recession. There was a statistic out, or a data set out that was about a year ago, and I can only imagine things are worse now. But they basically surveyed people, And 6 out of 10 people thought the US was already in a recession, like based on their personal finances. I imagine it's just as bad today as it was around a year ago when I first heard that statistic. And again, some of the pressure today is 30-year yields that rose to 5% for the first time since June. Now, the DOJ today ended the probe against the poly market firms in a win for crypto betting under Trump's administration. Mexico President Sheinbaum says Mexico will announce other measures if an agreement with the U.S. regarding new tariffs is not reached by August 1st. Goldman Sachs today projects a 3% gain in the S&P 500 over the next 3 months and an 11% gain over the next 12 months, targeting index levels of 6,400 over the next 3 months and 6,900 over the next 12 months. The World Trade Organization said today merchandise trade volume growth was stronger than expected in the first quarter, but it is expected to slow later in the year as higher tariffs weigh on import demand. Now, again, to the point I made earlier in this video, CPI was really better than expected today. US Supercore CPI year over year came in at 3.02%. That doesn't sound great. But US Supercore CPI month over month came in at 0.06%. Virtually still no inflation under at least this subcategory. Trump on Truth Social said consumer prices are low. Bring down the Fed rate now. And it makes me so bullish when I see under the, comments of something like this, so many people are like, you're wrong, inflation's coming, blah, blah, blah. It's like people just don't understand the basics of economics, like basic shit 101. Tariffs are a tax. The only way you get inflation, a consistent rise in inflation, like could you see one-time price increases? Sure. Okay, that's not inflation. The only way you get consistent inflation, like a 12, 24-month, multi-year inflation problem, is with excess money supply. If anything could be inflationary, it's the big, beautiful bill and the massive deficits that we're going to be running. It's not tariffs. People need to understand this. Inflation is always, 100% of the time, a money printing phenomena. Why? Because if you raise prices, but you don't give people any more money, what does that do? That hurts households. That hurts families. They spend less, people get laid off. Tariffs are actually just a drag on economic activity, because companies, when they cannot raise prices, because again, unless you're giving out money to everyone, then like you've seen in 2021 when all companies were raising prices, right? Even companies that didn't need to raise prices were raising prices because everyone else was, okay? You get in a scenario where there's a lot of competition. If Nike raises prices, but let's say Under Armour does not, because they're not tariffed, Under Armour will gain market share from Nike in a, theoretical, world. Okay. Well, that keeps the lid on how much Nike can raise prices, because losing market share is like the slow death of a company. Okay. So what choice do you really have if you're, let's say, Nike and you're heavily tariffed versus another company? Well, first and foremost, you look at how your operations can be more efficient. If you have not done so already, you take another look at that. Okay, can you save on shipment cost or fuel cost or material cost or, contracting cost? Okay, that's number one. Number two, you fire people. Okay. Probably a good mix of both of those things are going to happen with heavily tariffed companies. But what a lot of people are also missing is with the big, beautiful bill, I heard from Huntington's CEO last night on CNBC that's actually a massive stimulus from the BBB bill, not just the deficits, but some of the capital expenditure numbers, okay? So companies can go invest, let's say, $1 billion in Nvidia products, or in a new tractor, or in, a sawmill, whatever it is, and go expense that, like all in the first year. That's a big driver to the economy as well. A lot of taxes to be saved on that side. So corporations, yes, they are hit with higher tariffs, but they are getting some relief on the back end as well, which may actually, lower some of the effective tax rates that companies are going to have to pay, even though the tariff rate may be higher. I know it gets complicated, but that's a little bit of a positive to offset some of maybe the tariff negatives from a company profitability perspective. But again, I think it's very important to remember that tariffs are not inflationary. Okay, they're not by definition, unless we start seeing massive rate cuts. Like we're really restrictive now. We could see some rate cuts without sparking an inflation issue. But if we were to see like stimulus checks being sent out and a Fed that was like they were in 2021 with easy money everywhere, okay, get loans on this or that, no problem, then we'll start talking about an inflation problem. But until there's stimulus checks put out or the Fed starts doing quantitative, easing and buying assets to lower yields, there's not going to be an inflation problem. The faster you realize that, the more money you will make. And that's why I feel so passionately about this, because so many people are on the wrong side of this trade. You can let Wall Street be on the wrong side of the trade. I don't care about that. They'll catch up later and buy stocks when they're much higher than where they are today. But the faster that retail investors understand this, the better off your families will be. It's simple. Just go back to the basics of Econ 101. Inflation is always a money printing phenomena, or a debt issuing that leads to money printing phenomena. Again, BBB, that could be inflationary. Tariffs, they cannot be inflationary. It is impossible for tariffs to be inflationary because there's no money printing being done. It's a tax. I've never heard of a tax being inflationary. It's by definition deflationary. The argument is from the Fed that this will create a wage price spiral. And I'll just tell you, good luck going to your boss and demanding higher wages when odds are there's a software program that could do your job, or there has been chronic overhiring in the last couple of years where you may not be needed as is. Companies may be looking for an excuse to lay people off. So I guess careful what you wish for. So let me know your thoughts on all of this down below in the comment section, ladies and gentlemen. Do you think stocks are going higher or lower from here? That's the one question I will ask you. If you have not done so already, check out the link down below in the description of this video for the trading community as well. We did make some new moves over there to capture some of what is going on in markets today. Check it out, link down below in the description of this video. Have a great rest of your day, and I will see you in the next one.